Assalamu alaikum everyone. Welcome back to my channel Rapid Revision. Today's video is from it's a question from May June 2025 paper 2 variant 2. It's a partnerships question, and this is basically question number 2 of the paper of May June 2025. So if you guys haven't subscribed to my channel yet, so please hit the subscribe button and subscribe to my channel. Also, if you haven't followed me on Instagram yet, so please go and follow me on Instagram for more content from accounting and economics, O levels and IGCSE, and AS level accounting as well. The question here says, Farah and Salma are sisters who trade as a partnership. Their partnership agreement provides for the following: interest on capital 2% per annum, interest on drawings 4% per annum, a salary to Farah of 11,200 per annum, residual profits and losses to be shared as 30% for Farah and 70% for Salma. Then they're saying Farah and Salma provided the following details: the revenue profit for the year ended 28th February 2025. So their year basically ends at 28th February 2025. This is the last day of the year. So basically this year started on 1st March 2024. So this year started on 1st March 2024 and ends on 28th February 2025. They are telling you capital account balances at 1st March 2024 are 52,000 and 75,000 for each of the partners. And then they've given you current account balances for Farah and Salma. So Farah has a credit balance in the current account and Salma has a debit balance in the current account. Also, they have given you drawings for the year ended 28th February 2025. And what they are telling you here is that their drawings, they have taken drawings on 31st December 2024, which means that you are not supposed to charge a full year interest on drawings because they have taken the amount from the bank on 31st December 2024. So that means Farah and Salma, the drawings that they have taken from the bank, you will only charge 2 months interest on these drawings because the 4% interest is the annual interest that is charged on drawings, right? However, they have basically taken the amount during the year and that too on 31st December, so end of 2024, which means you need to charge interest on drawings for 2 months for the amount they have taken out from the bank. And goods taken for own use on 31st August 2024, for this you need to count the months. So August, September, no, August will not be included because 31st August, it's 31st August, September, October, November, December, January and February. So this is basically going to be, you need to charge 6 months interest for this. And for the amount that they withdrew from the bank, you need to charge 2 months interest for that. But okay, the next part, in the first part, they are asking you to make an appropriation account for the year ended 28th February 2025. So you start with profit for the year. Okay, so you guys should know what the format is. So basically, when we start from profit for the year, which is 38,175, 38,175 is the profit for the year. And then what you do is you add interest on drawings. So interest on drawings is charged to the partners. So you basically um, charge these to the partners so that partners are discouraged from withdrawing money. However, this is also shown in the current account on the debit side. It's like this is going to reduce the partner's capital. So you basically take this out and you add this to the profit for the year. And for each of these two, I'm going to write here Farah, and then for Farah, the drawings amount is 14,250, right? So she has only taken the amount from the bank. So for 14,250 multiplied by 4% multiplied by 2 divided by 12. This is my interest on drawings for Farah, and this is going to be $95 when you calculate this. For Salma, I'm going to make two calculations for Salma. One is the same as Farah, so 14,250 because she has taken also 14,250 multiplied by 4% multiplied by 2 divided by 12. So again, you get 95 for this. And for the drawings the goods drawings that she has taken, 5750. So 5750 multiplied by 4% multiplied by 6 divided by 12 is what you're supposed to do. So multiplied by 6 divided by 12 because these drawings are taken in mid-year, right? So this is going to be 115, and this basically is going to be $95. This is going to equal to the other drawings. The interest on drawings, interest on goods drawings is supposed to be 115, and the interest on drawings from bank is going to be 95. So when you add both of these, you get 210. So when you add 210 and 95, you will get an amount which is 305. This is the interest on drawings on interest on partners drawings that has been charged to the partners. So when you add this to the profit, so 38,175 plus 305 will give us 38,480. This is my profit after charging interest on drawings. And then what I need to do is I need to make the appropriations here. So less interest on capital. So interest on capital is basically, this is a reward to the partner of investing in the business. So Farah's interest on capital will be 52,000 multiplied by the percentage that they have given you for interest on capital is 2%. So this is simple. You don't need to calculate for any months. You don't need to go into the details for months, because this is like per annum. So the opening value of capital for Farah was 52,000. So 52,000 multiplied by 2 divided by 12 divided by 100. 2 divided by 100, which is 2%, is going to be 1040. And for Salma, you're going to repeat the calculation, but again, Salma's capital was a different capital. So Salma's capital was 75,000. So I'm going to write here 75,000 multiplied by 2%, which is going to be 1,500. This is Salma's interest on capital. Then there is a salary that we are giving to Farah, right? So I'm going to write here salary, and then I'm going to write here dash Farah. And this salary, the amount for this salary is, Farah is given an annual salary per annum 11,200. So I'm going to write here 11,200. When we add all of these, so we need to subtract this from our profit. So this is going to be 13,740. So I'm going to write here 13,740. This is going to be subtracted, because this is basically given to partners from the profit, and then the residual profit will be like 24,740. So when you calculate 38,480, so the calculation will be 38,480 minus 13,740, which is going to be 24,740, and 30% of this will go to 30% of 24,740 goes to Farah. So here they have given you the profits and losses are to be shared as Farah 30%, Salma 70%. So I'm going to write here profit shares, and then for Farah it's simply 30% of 24,740, which will be 7,422. And for Salma, it is 70% of 24,740, which is going to be 70% of 24,740, which is 17,318. This is going to be my profit shares. And when I'm going to basically, this is going to add up to 24,740. So this is how we make our appropriation account, which is pretty simple. In the next part, they are telling you to prepare a current account for Farah. So Farah's current account, okay, so all the calculations for Farah are important for Farah's current account. So I'm going to highlight that for you. Interest on drawings for Farah is this thing, so $95. Interest on capital for Farah is 1040. Farah is given a salary of 11,200, and Farah is given an amount as profit share, which is 7,422. Also, Farah's total drawings are 14,250. So basically, these calculations are important. These values are important. Also, Farah's opening balance of the current account. So I'm going to start with Farah's opening balance of the current account, which is 3450 credit balance. So I'm supposed to write this on the credit side. I will write here March 1, 2024. I'll write here balance brought down, and I'm going to write here 3450, which is Farah's opening balance of the current account. Then Farah is given interest on capital, so I'm going to write here interest on capital, and interest on capital for Farah was 1040. Farah has also given a salary, so I'm going to write here salary. I'm going to write here 11,200. Farah has been given a profit share, so I'm going to write here profit share, and I'm going to write here the amount of profit share is 7422. Then we have interest on drawings, so I'm going to write here interest on drawings. So for Farah's drawings, the interest was $95, and her total drawings was 14,250. So I'm going to write here 14,250 for drawings. Um, and the date for these obviously is going to be the last date, right? So this is going to be February 28, 2025. All of these are last dates. I'm going to write here February 28, 2025. And then I'm supposed to calculate a balance carried down for Farah's current account. So balance carried down will come on the debit side. I'm going to write here balance carried down, and this is going to be 8767, and this is going to be on February 28 again, 2025. Now the total for this account will be 23112 on both the sides, 23112. The balance carried down will become balance brought down. So I'm going to write here balance brought down, and this is one of the important steps because it's written in the question that you need to bring down the balance on 1st March 2025. So I'm going to write here March 1, 2025. So that's it for this part. Then they are saying Farah's partner Salma wanted to take further drawings. State 2 reasons why Salma should not take more drawings. So Salma has taken a lot of drawings. If you look at Salma's drawings, her total drawings are like 14,250 plus 5,750. This is like $20,000, right? And what Farah has been given as her total profit share. So if you look at her total profit share, it's 1,500, which is interest on capital, plus it is 17,318 for profit share, right? So her total, what she's been given, is way less. It's like around 18,000 something. So we can add this up: 13,000, 17,318 plus 1,500. So this is 18,818. This is what her total profit share is. However, what she's withdrawn is way more. Like she's already withdrawn $20,000. Salma's total drawings have already exceeded her total profit share. This is one reason why Salma should not take more drawings, because already she has a negative current account balance. If you look at Salma's current account balance, opening current account balance is already negative, and she's also taken more than what she has been allotted, right? So and there may be a limit on partners drawings, which we don't know. So maybe there's a limit set on partners drawings in the partnership agreement. So she has to abide by that limit. So okay, that's it for part C. And then in the last part, they're saying Farah and Salma would like to expand the business. They have decided to convert the business to a limited company. They are considering selling 30% of the ordinary share capital of the new company to each of their two brothers. The brothers would become the directors and would manage the business. Farah and each brother would receive a salary of 15,000 each year. Advise Farah and Salma whether or not they should make the above changes. Justify your answer with advantages and disadvantages to them of making these changes. So if Farah and Salma convert their business into a limited company, they will be able to raise more capital, obviously, because they are selling 30% of the shares they'll sell to their brothers, right? So their brothers will also bring in more capital. As their brothers will also be investing, the shareholders will have limited liability, so they will not have to sell their personal possessions to pay off the liabilities in case of loss or bankruptcy. So if their business goes into a loss, or if they become bankrupt, they will not have to sell their personal possessions in order to pay off the liabilities, because obviously they will lose up to what they have invested. However, Farah and Salma may lose control, as they will not be managing the day-to-day operations. Their brothers will be managing the day-to-day operations of the business, because they'll become directors, and their brothers may lack the experience of becoming the directors, right? So they may lack the expertise. So that will be a disadvantage of Farah and Salma, giving the management of the business to their brothers. So I would recommend Farah and Salma to not convert their business to a limited company. You guys can also say that yeah, so each of the brothers might not be good enough, or they might not have the expertise of doing business and managing the business. So that may also lead to a loss, right? um, And Farah and Salma, since they are just the they'll just become the investors, and they'll not be, part of the day-to-day running of the business. Because in limited companies, shareholders, they have this, there's this feature called divorce of ownership and control. So the ownership, let's say ownership is still, in the hands of Farah and Salma, but the control is in the hands of their brothers. So that is why they may lose control of their business. So that's it for this question. I hope this helps you. Thank you so much for watching.